Good morning, everyone, and welcome to this live trading webinar. I hope everyone has a great time so far. And let's dive into, first and foremost, let's make it clear that this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. And of course, any information relating to past performance of an investment does not necessarily guarantee future performance, right, guys? Now, for those who are new traders here, we have the weekly fundamental analysis in terms of the podcast, and I will show you how to find it. You go to admiralmarkets.com on your browser, then the website will open. Here where it says analytics, you click weekly trading podcast and you scroll down and you will see the previous ones. And of course, you're going to choose how you want to listen from Spotify or any other platform. And if you haven't downloaded the mobile application, please make sure you do that. So now about the markets, and of course, before we go that, let's I would like to say good morning to each and every one of you: Ibrahim, Ogiol, Mohammed, Nicholas, Maria, Janice, Larry, Mladen. Hello guys, thank you so much for your ongoing support. Nice feedback about the new thumbnail. That's awesome. Thank you so much. So let's start with the pound against the US dollar. And yesterday, guys, what did we explain here? That on the 4-hour chart, when we identified a downtrend and the market has a nice character, as we see, we had a new low during the New York session, and then the price at the end of the New York session, Tokyo and Sydney session, it just moved in a very small sideways range and a breakout. I said a breakout from here with a 20 pip stop loss. That's somewhere about there. That was a nice trade yesterday. It played out really well, and that was a 2-to-1 reward 2 by risking 1, or if you prefer risk to reward, then it's 1-2-2. So for today, the price is correcting towards this trend line of the channel, the upper one, and it looks like we're going to have a rejection. If the 4-hour candle ends as dodgy candle or leave behind this tail, it's a good sign for market weakness. And we can keep looking for some shorts again by having a look at the overall picture. Euro against the US dollar, pretty much the same. We explained that the market is moving in a clear defined downtrend. If we draw the fib from high to this low here, I extend it to the right. There is an inside. Let's check if this is an inside resistance. We need to put. Okay, that's a clear inside resistance. Now, what is an inside resistance? An inside resistance is the most recent swing in the market, but the two candles at the left, when we look this lower point here, you need two candles at the left not penetrated this current candle I'm showing you on the chart. And also you need one candle on the right. Again, I have it as a rule, two candles on the left and two candles on the right. It's easier for me and it's more solid. So you don't want to see a penetration from two candles on the left and two candles on the right. And that's the first thing. And the price must touch this inside resistance only once, and that's on the breakout. when you see a decisive breakout with this kind of price action, then it confirms that this is an inside resistance, and therefore we do expect the price to come and retest this one here. But I like to combine few tools along with the support and resistance concept, and that's the FIB tool as well. It's pretty much very accurate, and this one here, it's between the 38.2 and 23.6. So I would like to see some deep retracement, to be honest, in this currency pair, because in Forex usually we see deeper retracements, and somewhere around 50 or 61.8% is more it's preferable. But again, this inside resistance here, something that exists in the market, it's very strong. The market can stop and reverse from this point here, but if it penetrates, that's why we don't place limit orders to sell it. But if it penetrates and move upward, then 50%, 1.8% will be the ideal areas to look for some strong price action to sell the euro against the US dollar. Now, how would I play the intraday trading today? If I want to go on the 15-minute chart, knowing that the 4-hour chart and the daily chart is in a downtrend, on the 15-minute chart, I will be looking only for short. I see many traders that are trying to look for to buy these extensions on the 15-minute chart. But why to do that? As the higher time frame, it's on a correction, but it's on a correction based on a strong daily and 4-hour downtrend. So preferably, I would like to see this market roll over to create a new low here. Some other people call it break of structure, change of control. I don't understand how they come out with all these things. You know, in every technical analysis book, there is higher highs, higher lows, lower highs, lower lows, support, resistance. Okay, that's what we have so far. So if this market make lower low, break of structure, change of control, A, B, C, D, F, whatever you call it, the information, it's always the same. Sellers are in control. So break down, wait for the pullback or correction to sell it. If you have some, this is one strategy, like the order blocks strategy and all this stuff, they've been taken by the depth of the market, and they are looking to sell at this area because they consider as premium areas. But at the end, it comes down to each individual how they would like to place their entries. This is only one method to enter the market, the correction. But the correction trading, yes, it's higher reward to risk, but it's the one that has the lowest winning trades. So there are two different things here. Okay. Now, I'm not going to go into that much detail on this kind of webinars, okay? But I'm just telling you information so you can put the puzzle together and understand. There are traders on the lower time frames. They like to play breakout strategies, like they want to see consolidation, and after that to place a breakout strategy. Let's say if the market is in a downtrend, to sell with a tidy stop loss and go for 2-to-1 or 3-to-1, and that's it. So we need to be patient, and we need to have the solid plan to trade. Yesterday, Australian dollar against the US dollar, after the reverse, the Reserve Bank of Australia didn't just kept the rates unchanged. Two doji candles appear on the charts. We explained that if we have entered here with a nice tight stop loss there, the market possibly could push to the upside, and it's enough room for 2-to-1 until this inside resistance. So why it's inside resistance? Because we see the penetration. It happened with a decisive close. We have two candles on the left ideally it's 2 candles on the right, but we have only 1 candle. But again, this market broke to the downside, so the interaction it's confirming the concept of inside resistance. So the market can really trade it up to here. If a reversal price action appears here on 4-hour chart, 1-hour chart, maybe it's going to show the weakness and the market will continue to moving within this range. Now the market is ranging here, okay? But again, today, if you ask me how I would have played it, I will be looking based on this support now here. I will be looking to, actually, to be honest, seeing it again, I will then go to sell it, of course, but I will be looking to buy it very cautiously, because I firmly believe that once the market tapped into an area of support, touch the area of support, and I told you many times that there are many buy limit orders at support areas waiting to be executed to the outside. Also, there are people that they sell with a stop losses above, and let's say any stop loss above, it's going to consider on a selling position, a stop loss above, it's going to consider as a buy stop order to get out of the market if it's going to move against you. And also there are traders that they have stop losses from older positions here, maybe somewhere there, and the market like to false break out the support and push to the upside. On the net now, you're going to read it as the liquidation zones, like they tapped into this area of support, they liquidated the weak longs, and then the market continued to the upside, or the weak shorts actually. Okay, different names, everything talks about the same subject. But people, they think that it's a new thing and we have to learn it. So it's good to try and learn new things. And I also love learning new things, but I also try to understand what is the meaning behind. Okay, so guys, any question? Rumen, we talked about the inside support and resistance today. Ibrahim said, please don't forget to like, guys, increase support for Theo. He deserves it. Oh my God. Thank you so much for your very kind words, Ibrahim. I really appreciate it, man. Rumen asked Theo, do you use order flow anywhere in your trades? Do I use order flow in terms of what? In terms of depth of the market and trade based on order flow structure within the candles? If that's your question, Rumen, I don't have the software to. There are specific softwares. They allow you to tap into these areas. Okay, they are under subscription. I try some versions, but because my personality is my trading personality is different in that way, so I prefer to trade on these lower time frames the way I execute, because I find it very comfortable and very emotionally absolutely manageable for me. Next one, USD/JPY. So yesterday, hanging man at an area of at an extension area. It's not an area of resistance yet, but it's an extension area. For some people, they identify it as an area of resistance, and that's absolutely fine. But for me, based on the analysis we did yesterday, it's not an area of resistance. If we go down to the 4-hour chart and zoom out a little bit, we can see that there are, let's delete this one. Now, 4-hour chart, it's not that clear. So daily chart, back to the daily chart. So daily chart here, market, double bottom, and false break the previous swing high. That's this one here at A. And back to the drawing, a bearish candle tried to push this market a bit lower, but we see the price found some support at these areas here, and therefore we do expect it. Just bear with me, guys, 1 second. So we do expect the market to continue to the upside a little bit until it's going to tap into this area of strong resistance. This resistance I will consider as a more valid, to be honest. Maybe I'm totally wrong, but again, in trading, it's not a business that who is right and who is wrong. It's who trades with high probabilities and who trades with low probabilities. If you are right on a low probability, write this down. In trading, if you are right on a low probability setup, you're going to experience a winning trade. If you are wrong on a high probability setup, you're going to experience a losing trade. Okay, now, which one is more painful? Usually, for many people, it's the second, but that's where you have to flip your mindset. It must be more painful when in a low probability trade, you get winning trades, and in a high probability trades, you get losing trades, because you want, it's a business about probabilities. Okay, if you flip your mindset and think in these terms, you're going to experience trading in a more meaningful way and in more structural way within your head. And that's going to help you a lot. USD Canadian dollar, it broke to the upside very surprisingly. So again, our prediction to find some strong resistance here didn't come. But again, now there is a high chance that we're going to see a false breakout. So after a market breaks to the upside and closes one, because financial markets are very volatile and it's not a confirm. I recently did too much of research on YouTube, and I put so many hours, trust me, unlimited amount of hours recently to watch many videos about smart money concept, because I was very interested to see what sort of things they put there. There are very good things also, but there are things that they are not how the financial markets work in nature. Okay. And I explained you yesterday many things. Now, one close above a resistance is not enough in the Forex market to, or in crypto market, to take it as a valid close. Do your back test to confirm this stuff. So maybe the market is going to false break to the downside. There are millions of people on the lower time frames, they start buying this one, and other millions of people, they are find some structure here to place buy stop orders with a stop loss below these swing lows. But the case is, if 2 days in a row the market doesn't close above this this broken resistance, then it make it very dangerous for initiating long positions here. Okay, and again, we are talking in terms of probabilities. USD CHF, it took this higher high series, and we have this higher low from here. So pretty much now market, it's in a technically uptrend. There is still room for opportunity to move a little bit higher, in my opinion. So this one, it looks a bit more clear on a lower time frames for intraday. For this one here, if I was about to trade this market, I will be looking to buy it only. And like here, market made lower highs and lower lows, confirm lower lows, confirm lower highs. So I will be waiting for the market to change direction and make a new high here. And in technical analysis, we call this as a non-failure swing. If the market is going to push to the upside like this, and it's going to retest it somewhere here, And yeah, we're going to be looking to buy. That's a USD CHF for intraday traders. You can keep an eye if we see some change of direction during the London session, or maybe during the New York session. Euro JPY bearish engulfing yesterday, very messy here. Now these tops, they are not confirmed this line anymore, so we have to readjust the line. And again, that's why I can't wait when we're going to use the trading view, because I want to take, and this is confusing for traders. Now, you don't want to cut the price in the middle, but on the other hand, you must have the most recent support, because that's the most relevant. So in this case here is the most recent relevant support. It's this one here. And if the price breaks below, then the most relevant, it's going to be this one here. Okay. So the market now clearly is in a ranging. After this break, we said we went to see a 2-day close above this resistance. Market didn't close higher, so pushed backwards, ranging here, trying to find some support. These are good zones to be traded on the lower time frames, of course. And let's see. Yeah, USD Canadian. Henry said USD Canadian dollar, it's an oversold. Now, guys, this is the best example. And thanks, Henry, that mentioning, because you gave me a good reason to explain you. You will see oversold stochastic, and this is how indicators works. Okay, RSI and stochastic. Every time the market is kind of consolidating, the RSI and stochastic, they will be accumulated both. So at every breakout, all the indicators, they will be, every breakout to the upside, all indicators, they will be oversold, all of them, because the price accumulates and they calculate the closing prices, makes this accumulation to create a rising curve, a rising line on these indicators. Okay, so keep that in mind. Don't try to sell based on oversold condition, or to buy based on overbought condition of the indicators. After a breakout, you have to start looking at the indicators. Once the trend matures, then we start paying attention to the indicator, like we start paying attention here, but still higher high. And then at this resistance here, with the indicator printing negative divergence. But that was a very good example to explain it. Okay, guys, did you get it? Do you understand it? Indicators, they will be in the extreme overbought, oversold conditions at every breakout. Okay. Pound JPY at this support. So this support here is, it's very clear to identify it. You see top, bottom. Now we do expect on the lower time frame, someone using 15-minute chart, that was very deep. So under normal market conditions on a 15-minute chart, let's say here, we could have bought based on of the market structure. But on the 5-minute chart, it was early during the Tokyo session, and we only had some opportunities maybe here, so it wasn't even that clear. But again, that level could be used. You can use daily levels to use them for scalping, for intraday. It's absolutely fine, and they give the highest reward to the highest probabilities. When you find, regardless the direction, just generally a strong level of support, it can possibly give a nice price action reversal on the 5-minute, 15-minute chart. and it's a high probability trade. Do never associate high probability trades with winning trades. Okay, it doesn't make any association. High probability trade can be a winning and can also be a losing trade. But high probability, it means you increase the chances to experience winning trade. Let's check the gold. We had these areas of strong area of resistance, and we identified it. Price fluctuate a little bit. It's been a while to check gold actually, and now it pushed backward. So maybe we're going to see some continuation to the downside. On the 4-hour chart, price made this higher high here, higher high on the 4-hour chart. Breakout traders, what do they like to do? They put a sell stop here, sell stop order with a stop loss here, and this enough for 2 to 1 until the next area of support. Okay, when you see this kind of simple retracement on the lower time frame, you can play breakout strategy. Other traders, they like to see only price action. If they see bearish engulfing here, they're going to be all over the place. They're going to take a trade to the short side. Depends how you want to play it. Now DAX, William said, thanks Theo for the explanation of the oversold and breakout. Didn't hear that before. Yes, of course you didn't hear that before, because very few people like myself, they make the effort to read and become experts in technical analysis and go through all the indicators from this origin, from the source, and learn how they consist, learn how they apply in different markets. So yesterday, this is the DAX. That's the day's low. That's the previous day's high. On the 4-hour chart, though, these lines here is the spread. 4-hour chart, we have this high here, and then there is another strong resistance we can see here, but I prefer, okay, just leave it. It's like this line, it's only for this area here. Let's go on the 5-minute chart. Very nice, higher highs, higher lows can be consist here. What's the spread? It's 20. I would like to go for a breakout here by stop. We still have 1 minute for the London Open. Let me check exactly how many seconds. 40 seconds. So guys, now we are about to trade the scalping trading we do every single morning. $15 seconds for the London Open. I will be looking to buy at the breakout here. 2 seconds. So buy stop. I place the buy stop order here. If the market is going to move to the upside, I want to be a buyer at this point. If the market is going to move to the downside, I'm not really interested, but the market took the buy stop order. So I think I got triggered. Not yet. I'm not sure. Okay, let's see if we're going to see a nice breakout to the upside. We wait and see what's going to happen. Hello to everyone who join us now. Is the previous price pattern? Ibrahim asked, how important is previous price pattern in your analysis? The most recent one is very important. Okay, the most recent one. Now, what I will be looking, to get out of the trade if price breaks below this low here. Okay, that's where my stop loss is. That's where my stop loss goes. So let's see if the market is going to shoot upwards. Guys, any questions? Does anyone hold any trades from yesterday? Any swing trading? Some people, they used to hold the gold. Are you still in the trading? Pound yen short. And again, remember, we always said that what always when we do breakout strategies, always the market, it's very suspected for a false breakout. So let's see what's going to happen here. Okay, I'll close the trade if we're going to close below this low point here. Dow Jones, yes, Dow Jones. Dow Jones, let's check. So here it's a low, here it's a low. Market make a high. Technically, we can see some more weakness here. If we see this, this this price move a little bit to the downside, here we can find the support, but right now it's within this short-term downtrend. Again, I don't read any clear market structure here. On the lower time frames for our chart, okay, M321 losing money like almost every day with this strategy. That's your, yep, I respect your opinion, absolutely fine. Again, the way I trade is not applicable to everyone, but I'm sure from this webinar you can get more, you can get too much value of other stuff, if not for the trading strategy. So please act and trade based on your own intelligence. No problem with that, of course. Okay, guys, so I'm still in the trade, no close below here. I'm still very positive for some more bullishness on the 4-hour chart. This is a resistance at the 4-hour chart here, and I will be willing to I'm expecting the price to move a little bit to the upside, to be honest. M321 is not my opinion, it's the fact. Yes, other stuff is good. Okay. Ibrahim, I'm still in trade also. There are 15 pips until this resistance here. Let's see how the market is going to react. If the price is going to move a little bit upward. Market is bullish. Yep. All right, guys. I have to wrap up for today. It was again a privilege and honor to host this webinar for you. I hope you gain a lot of value. You can, you are free to leave any feedback, any comment. It's absolutely fine. I want to wish to everyone to have a fantastic weekend ahead, and I look forward to see every one of you again on Monday at the same time. Get some rest. Happy weekend, and I'll talk to you soon. Bye for now.